Stop getting caught out in these trades, wait for more confirmation, and you will catch successful trades. In today's video, guys, we're going to break down how I called this trade live last Friday during NFP. I simply used ICT macros, inversion fair value gaps, and liquidity. Let's get into it. Now, if you're new here, my name is Ruben. I primarily do trade ICT macros, liquidity, and inversion fair value gaps. Normally, I'm a London session trader, but last Friday and every Friday from here onwards, I'm going to go live on YouTube roughly at about 9:20 a.m. New York time. So lock that in your calendars. That'll be set in stone from this week onwards. With that being said, guys, let's just break down what I was looking for on this particular day and how I had the confidence to mention that I was looking for longs and that longs were favorable during this time frame here. It all starts from the higher time frame and looking at what price has previously done. Now, if we go back and we just look at what the previous session has done, this is the 1 minute chart. Let's just go back onto, say, a 15-minute chart to get a bit of a gauge. Wouldn't you say that we're extremely bearish? You can see price, even from up here from the 31st of July, price was just stepping down. And then we get to Friday, which is over here somewhere. That's the trade we're looking at. But why was I confident to look for longs even in a downtrend? And that is going to be the biggest question for people. How do I catch reversal trades when the market is trending down? I'm going to show you today. Now, I want to go to the 15-minute chart and just zoom out. And what I want to show you guys here is just a bunch of things. But you can see the last couple of weeks, we've been stepping up and up and up and up. Trading does not need to be complex. Trading can be simplified into a few areas. And the first is going to be liquidity. So liquidity rests at swing highs and swing lows. And what I want to point out is what I saw on the 4-hour chart. Now, on the 4-hour chart, let's just have a look. We can see there's a bunch of sell-side liquidity here. And the one that I actually focused on for this live session was two. There was this one here, and there was these two sell-side liquidity points right there. Now, these were generated from a while ago. These are generated actually from, I think it was last week. Now, let's break the basics down in terms of ICT, liquidity, strategies, all the rest of it. You can see the market here during the New York session. It swept sell-side liquidity. You don't need to worry too much if you've got a higher time frame sweep. If you're looking for lower time frame sweeps, then you want those sweeps to occur in fair value gaps. However, in this case, this is a 4-hour sweep of liquidity, a 4-hour sweep from the 16th of July, 2 weeks ago. We've now swept sell side from 2 weeks ago. There is a very high chance that because we're in a macro, that we could pivot and we could reverse. So the 4-hour chart, we get the sweep of sell side. We go back down to the 1 minute chart, and this is where we're going to pair a few concepts that ICT has talked about. We're going to discuss the 9:30 to 10 Judas Swing, the power of 3, and also the way in which news can manipulate price action. This here is that swing low. That red line is the swing low I just mentioned. And I want to mark out the macro with two vertical lines. So the first one is going to be 950. Let's mark that out right here with black. We'll do that. And the second one is over here, which is 1010. Now I want you to look in this macro, and I can't make it up. Obviously this is hindsight, but if you want to watch the live video, go and check that out. The link to that will be in the description of this video. You can see me talk through it live, mention that I'm looking for reversals, mention that I want to see this candle act as some kind of manipulation. And it all comes back to the basics. We've swept sell side. We're in a macro. And what do we have structurally that the market can use to reverse from? Have a look at this. We've got accumulation, we've got manipulation, and manipulation happens at what time frame? Manipulation happens at the 10 o'clock news. Look, 10 o'clock news, you wait for the news to come out. We've accumulated, we've manipulated, we've swept sell side. We are inside of a macro where reversals do happen more often than not. And then all we're waiting for now is a change in the state of delivery and an inversion fair value gap. So it's all these things coming together. You don't need to have a complex strategy and think that you need to predict the market. You're waiting for the market to sweep sell side. If we sweep higher time frame liquidity and we're in a macro and we have the power of 3, you expect some kind of reversal. It does not have to go all the way up here to have a profitable trade. Making money is possible and is very easy just taking it from here to here. So on the live session, I actually mentioned, look, we've got an inverse fair value gap here, and we've also closed above these down close candles. When price closes here, this is what we call a change in the state of delivery. So I'm gonna mark this out, change in the state of delivery. We've also got two order blocks. When price closes above this candle here, when price closes above this candle here, that's an order block. When price closes above this candle here, that is an order block. But notice how I'm not just choosing any inversion. I'm not just choosing any change in the state. I'm not just choosing any order block. You need to have a higher time frame context, and you need to have multiple confluences coming together. That's really important. A lot of people get wrecked because they're longing every single inversion fair value gap. Take this for example. People are probably saying, well, Ruben, why didn't you long this fair value gap here? It's a macro, we've got a change in the state, we've got an inverse, because we haven't swept liquidity. We haven't swept liquidity. We're dropping. It's too risky to go for a trade like this. Wait until we sweep high time frame liquidity. Wait until we have the power of 3. Wait until we have a manipulation candle that happens at news at 10 o'clock. Perfect framework. Stop getting caught out in these trades, wait for more confirmation, and you will catch successful trades. Something like this is perfect, like this. Go for a long position here, stop below the order block or stop below the inverse, go for a 1-to-1 to start, and then where can you take your next partial? Up here somewhere. Why up here, Ruben? Why is up here a good position to take a partial? Well, let me mark out 2 things. We have a dealing range from this high to this low. So if you pull a Fibonacci on this range from swing high to swing low, take a partial here at equilibrium. When price taps up into OTE, that is when you can take your second contract off and then hold a runner. The runner gets stopped to break even, but guess what? You can re-enter later. Price pulls back, we push higher. So notice how I'm combining the higher time frame chart, which was the 4-hour chart. Let's go back to that. And typically for me, guys, I'll just put it out there. Typically, I don't need to look at the 4-hour chart. Typically, the 15 minutes enough. But this is a really good point if you're still here. When we've had massive drop-offs, we need to be aware that the market's probably going to seek external liquidity. And external for me is anything greater than the 15-minute chart. 15 minutes kind of internal, it's moderate liquidity, but the 4-hour chart, the daily chart, those are external liquidity points. So always start on a higher time frame chart. That could be the 4-hour, the 1-hour. Typically for me, it's the 15-minute. But again, because we've had a big drop, we go to the higher time frames. Once you've swept liquidity on the higher time frames, drop back down to a 1-minute chart. And once you're on the 1-minute chart, this is where you're looking for those entry confirmations. Please keep in mind, an inversion fair value gap means nothing without context. You cannot just long or short any inversion during a macro. It's not going to work. You're going to get chopped up. You need to wait for liquidity to be swept. And these are the confirmations to wait for. Power of 3, liquidity sweeps, macro, news manipulation, right? These are all things to consider to take this kind of trade. It's easy, right? When you look at it like this, in the moment, it might be hard, but my advice when you're learning these concepts, when you're trying to apply these concepts, is actually chart this out. If you're new to ICT, if you're struggling with ICT, chart out what I've done here, chart it on your screen and study it. And look for examples very similar to this to then apply that knowledge that you've got. Now for this third and final part of the video, I want to discuss what ICT calls the 9:30 to 10 Judas Swing. 9:30 to 10 Judas Swing. Now Judas Swing is manipulation. That's all it is. And what I'm going to do is I'm going to mark out some vertical lines to illustrate where 9:30 is and also where 10 o'clock is. So if you trade the New York session, this is something to also look into. So 9:30 is going to be right here, this black line. Let's just make that a solid line. And 10 o'clock obviously is this news candle. Now, we're using this to phrase our analysis. We're thinking that all this move down here is manipulation. But when do we confirm that manipulation? When this inversion fair value gap is created. So you're going to see time and time again that the move that happens from 9:30 to 10 is actually the fake move. And you can actually take the opposite of that market sentiment in the opposite direction. So if 9:30 to 10 trends down and you're looking for buys, wait for a sweep, wait for a power of 3 and take the opposite trade. If 9:30 to 10 trends up and you're looking for sells, wait for price to sweep liquidity, tap into a fair value gap, and then look for sells. Pretty easy, right? But you're going to have to study this in your charts to build confidence with this model. With that being said, guys, I hope you enjoyed this video. If you haven't yet, join the free Discord. The link to that is in the description below. If you like these breakdowns, let me know in the comments below. And keep in mind, every Friday from now on, I'll be going live for the New York session for free on YouTube. Stay tuned. Talk soon. Have a great weekend. Peace.